Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three. Three stocks, three charts, three trades. Rick Ducat will take us through the charts. And here to take us through the trades, we've got Scott Bauer, CEO, Prosper Trading Academy. Scott, thanks so much for joining us this Monday morning. Good morning to you. All right, Scott, I want to get your big picture take on what we're seeing with regard to the market action. We had that headline about Moody's downgrading the U.S. credit rating. What's your view on this?
I'm surprised there's not more pressure on the market, and not just because of that headline, but because of what happened to the bond market, the continuing acceleration of rates moving higher and the pressure that this is putting on the market. So I'm really surprised with this move, seeing the 30-year over 5%, the 10-year over 4.5%, that the equity market is really hanging in there and not getting hit more than it is right now.
Okay, and not getting hit more than it is right now. All right, let's talk about some of the picks on your list. Let's dive into your first trade. You've got SolarEdge on your list. It is down today. Year to date, though, it's been a strong performer. What's your view here?
I think there's a very, very big potential to the upside because solar is back in vogue. It's popular again here, but SolarEdge, SEDG, has a massive amount of short interest here. So we saw a little bit of a run last week. It's pulling back a little bit here. I really think there's an opportunity that if the sector starts, picking up again, we're seeing First Solar off those highs as well. But if there's any sort of news here, that short interest that is out there can really push this stock higher. So I'm actually just buying some naked calls here going out about a month, June expiration. I'm buying the 22.5 strike calls for $2.
Okay, all right, Rick, then, all right, I talked about the performance year to date, but I know you often look a little further out. Rick, take us through what you're seeing when it comes to the chart for SolarEdge.
Yeah, and we will take a long-term look here, but for the shorter term, this is one of those charts that's fairly easy to see the near-term important price ranges. And what I mean by that is you can see our red line here near 23, frequently marked high points and low points for price. High point, once again, that's about where we are as of last week's close there. So then to the downside, we had our lows there and there near 11. So 11 to 23, those are the clear ceiling and floor that we can see here for this particular name. Now, interesting situation with our moving averages. Price has pretty convincingly pushed above our yellow 21-day and orange 63-day exponential moving averages. We have a short-term upward trend line that has been formed. Look at our purple 252 EMA, though. It's far above current prices. It's had a long decline here. It'll speaks to kind of the precipitous fall that we've seen in this name. RSI backing out of the overbought area just a little bit, but still quite elevated as we sit near this resistance level near 23. And if we were to look at our volume profile and standard deviation channels, we can see that our point of control on our volume profile is near the lower end of the chart. This is often interpreted as a sign of a significant low. Volume starts to pick up again near 26, and we've got our confluence here near 32. And as promised, a very quick glance at our longer-term chart, a severely beaten down name here, far away from our old highs of 390 or so.
Okay, all right. Scott, I'm going to yield the floor back to you. Any final thoughts on SolarEdge before we move on to your next trade?
No, I just really like the upside opportunity because of the short amount of float that's out there. And, excuse me, there could really be a short squeeze.
Okay, all right. So let's move on to your next one. Vertiv, pretty flat right now, but it has underperformed the S&P 500 year to date. What's your plan here?
I like the chart because after the big sell-off here, stock rallied really nicely, got back up above the 50, the 200-day moving average, has pulled back just a little bit, but is holding now support at that 200-day moving average, which I really like here. So I like the upside. I think there's a cheap opportunity here, again, going out about a month or so. I'm buying the June 20th, 115, 120 call spread. Probably do that for about $1.20, $1.25 here. And I like the fact that on this little bit of a pullback, it held support at that 200-day moving average.
Okay, so you have a bullish view on this one from here. All right, Rick, what do the patterns in the chart show us?
So unfortunately, I don't have the 200 simple moving average here, but I have our three other moving averages: yellow 21-day, orange 63-day, purple 250 2-day. You can see that when we do look at these moving averages, our shortest term, fastest yellow 21-day has crossed above its two slower moving peers. Price did hold the line at the 252-day EMA, another long-term significant moving average many traders look at. Not, necessarily going to line up exactly with what Scott was talking about, but kind of the general area where we consolidated a little bit at this previous high point near 94, and we've started to push up from beyond that level. We also have this very convenient confluence. Everything's all bunched together. So this level near 94, there's a lot of technical potential support there just based on everything, coming together at that point. 116, that's the high point that we had after our gap up, pretty close to where Scott was choosing the strikes for his trade. We can also see that RSI is still holding on to our green trend line, despite having backed off from that overbought area just a little bit. So if we were to take out this old level near 116, the next area of interest to the upside would be quite close above here. We've got our volume node here right around 115 or so, and then not really too many other notable spikes in our volume profile at all above where we are now. But then the point of control all the way down here just below our confluence of moving averages near about 88 or so. So support 88 to 94, that general area. There's quite a bit going on.
Okay, quite a bit going on in that area. Scott, let's talk about your final trade. You've got Valero Energy on your list. It has outperformed the S&P 500 year to date. What's your take here?
Yeah, couple things. It's up at big technical resistance at the 200-day moving average. We know the big move that oil has made off of those lows from a week or two ago, and I think it just has moved way too quickly, way too far. So the fact that Valero has made this big move and it's up near that 200-day moving average, which if you look back over the last year or so has been major resistance, I think that this is ready for a push back down. So I'm buying the June 20th expiration 130. 120 put spread, paying $2.
Okay, all right, so that's a bearish view on this one. Rick, take us through what you notice when it comes to the chart for Valero.
Right, bumping up against a long-term moving average here many times. So look at our purple 252-day EMA, kind of a similar concept to what Scott was talking about, how often price really struggled to push above it. And now we are hanging on above it for now, but we also haven't really broken out of this longer-term downward sloping trend line here. So we do have a trend line going up from those 52-week lows, but we have cleared it pretty notably at this point here. So purple 252-day EMA would be a significant downside point to watch. It comes in near 132.56. Then we've got another confluence, yellow 21-day, orange 63-day, right on top of each other near about 125. RSI still holding on to its trend line, still just a tad out of that overbought area, so a push to the upside could generate that bullish signal once again here. But, not really a great sign that we haven't done much to take out this old set of highs. We're kind of stuck around that same area, and this level near 144 stands out. It's often been a high and low point for price at that red line there. So if we were to move higher, we can see that our +2 standard deviation channel, 2 standard deviations from our linear regression line, lines up at 144 with that set of highs. We're right about now at that point of control here. This is by far the important volume area on our chart here. So this would be a really important point for the bulls to hold.
Okay, important point for the bulls to hold. I wonder, Scott, if that's one of the levels that you're paying attention to, as Rick mentioned, not being able to cross that old high. Any final thoughts then on what you're paying attention to here on Valero, Scott?
No, that's exactly what I'm looking at, and that resistance has been so strong. I'm really playing right off of that right now, and just buying that cheap downside put spread.
All right, well, shares of Valero down 1% right now. That's Scott Bauer, CEO, Prosper Trading Academy, on his list today. Valero Energy, direction bearish. His bullish takes were Vertiv and SolarEdge. Thank you so much to both Scott and our very own Rick Ducat.